What's up? What is up, guys? In this video, I'm going to get right to it. We're going to talk about support and resistance. I want to start breaking down more of these concepts on my page so you guys see how I trade, to give some free value. And so you guys can really understand, not just the basics of some of these topics, but how to actually use them. So I'm going to tell you guys what support and resistance is and how you can go ahead and actually apply it to your charts. Just make sure when it comes to support and resistance, you don't want to just clutter up your charts and draw a bunch of lines. So hopefully after this video, if you understand how to really draw support and resistance, make sure you like, subscribe, and follow me on IG as well, Real Shy J, because I'm going to be dropping a lot more value on this channel when it comes to trading, business, and everything in general. So let's get right into the video and talk about how to find support and resistance on your charts. Okay, guys, so what is, support and resistance? Like I said, we want to just give some definitions. So real quick, if you don't know, resistance is your highest level and when the market's not going to go up any further, right? So think of it this way, when you're finding a resistance area, usually price will, go up and then it might come down and it might retest. And then eventually, price will tell you it's not going any higher than here. So that's how resistance has been made and the market will start to drop. And eventually it will make, lower highs and continue down. And then it'll find a support level where it stops, right? So remember, it's also important to keep in mind that we don't control the market, guys. We are, just regular day traders. We are just regular retail traders. We can't control the market. It's the banks and the institutions that control the market. So you could throw 500 lots at where you think a resistance level is. It's not going to shift the market. So don't base your support and resistance just on where you're getting in, expecting the market to drop because you press sell, because that's not the case. The only people that can really affect the market are, institutions and banks, and then, obviously the news and things like that in the economy. But other than that, that is the only thing that will control the market. So think of, support and resistance as if you're sitting, in your house, right? You're probably sitting on furniture, which is on the floor. And then, your resistance is your ceiling, which is the highest point, so you're not going to go any higher than your ceiling unless you walk upstairs. So we'll just label this real quick. Resistance is at our top, and that's our ceiling. And then your floor is always going to be your support. Now, your support can become your resistance and vice versa, but we're going to talk about that in a little bit right now. I just want you guys to understand how this works. So basically, resistance just represents areas where price, can't break through. And I have a rule, that I use personally. It says no retest, no entry, right? Meaning if the market isn't retesting an area a couple different times, you don't necessarily want to get in, right? Because what if you got in here, price did drop, but it went up twice before making the major move down. And then sometimes price will retest again, make different levels of structure. So that comes into, more advanced type of concepts. But let's say we wanted to find a support level. How would we do that? So the same way we waited for the market, to go up, we usually see the market come down and then it might go back up and go back down. And then once again, we'll probably see after, the market has been tested multiple times, a support level. So basically all these areas are opportunities where we want to sell at the top, and at the bottom, when we see support, when we see that floor, those are all opportunities where we're looking to potentially buy and looking for the market to go up. And guys, just remember, the market is made up of, like I said, institutions and people. So just think, when it comes to resistance, you're basically just finding levels where sellers, are coming into the market and buyers can't be pushed any higher, or buyers can't push the market any higher. And then the same thing when it comes to support, buyers are becoming, the strong, dominant people in the market, and sellers are being pushed out. So if you think of it that way, it'll be a lot more easy, to actually find trades and setups like that and hold your trades a little bit longer. Now I'm going to go to, a specific market area where I found earlier that it's going to give me a good region of price so I can actually show you guys how to draw it. Now, like I said, remember, we don't shift the market. So I have a rule where I like to round all my levels off to even numbers. And those are psychological key levels, whatever you want to call them. But, we can't move the market. So number one, when it comes to finding these levels, you want to find, really areas where test was or areas where price was tested multiple times in different ways. And I'll explain that a little bit further. But basically what I'm trying to get you guys to see is, number one, you always want to look to the left when it comes to trading. A lot of people just start right where the market is. Let's say the market opened, right here. You don't want to just press buy because you see some bullish candles. No, you want to look to the left and you really want to see what was happening. So, we had a lot of impulsive movement, and then the market kind of got consolidated and came to a stop. So this would have been a great resistance point for us to look at and kind of mark off. Now I'm going to mark off a couple more And then I'll tell you why I did that and how we need to, round them to even numbers so we can be more accurate with the overall, flow of how institutions and, banks are moving, because they're not going to just reverse the market at random areas like 150736. It's going to happen, around 153700 or 154800. So let me just find a couple more levels, and then we'll talk about why I drew them and how you could have actually used them to find trade entries. Now, you don't want to have your charts too cluttered. This is a lot of lines right here, but as you go on, eventually you'll have less and less, clutter on your chart, less and less lines. But when you're starting out, you do want to make sure that you're not missing any key levels. So sometimes, it's okay to have a couple more than you need to. But eventually you'll simplify it and probably only have a couple, on the major time frames like the daily and the 4 hour. And then you'll find a couple minor ones for entries and things like that. Now, as we can see, price didn't break any higher right here. Price came down, retraced, went down. We see this now acting as resistance. Went down again. See price acting as support. It will support over here. Goes back up. Now this line's acting as resistance again. And then price drops and goes to this major low and breaks our previous low. Right? So remember, guys, with price too, with Forex, it's never going up forever. It's never going down forever. We're blessed in the Forex market to be able to make money both ways. So we make money when price is going up as long as we buy at lower points. And we make money when price is going down as long as we sell at higher points. So think of it this way. What happens on one side of the market usually happens on the other. And we call this like market symmetry, or just basically, price being reciprocal. So whatever happened on this side for buyers, now sellers have to try and get them out. And as you can see, basically, price was going up for a nice period of time, and then sellers erased everything that buyers did in this whole, sequence. So when it comes to, these support and resistance levels, you basically have to have, two options. You're either waiting for, a break of a support level, and then you're going to get a retest, or you're either going to get a pullback with a correction and then maybe a continuation. But it really depends on the setup in the trade. So what I like to do, like I said, is round these off to even numbers. So I'm very precise with my, my trading plan, and as well as finding key levels. So let's start at the top. That would have been 753, and we'll round that down to 753,700. Because like I said, we want to find a round number, because that's where, banks and institutions are actually going to reverse. You see price came right into that level and then reversed at that even number, right? So for this one, we have 150. We're going to round that up to 600. This one right here, we could look at and say 153. So we're going to round this one down to just 500. And if you guys start to do this, it'll just make your trading a lot more simple. It'll keep your charts more organized, and you won't find yourself, with a bunch of random lines in random places, guys. 147, we were pretty close to this one. We just had to round it down. Or, we could round this one up really to 100. 144. We'll round that one up. Yeah, just to 500. And then this one down here looks like we could round this one up. Honestly, I should have drawn that more in those wicks. So we'll say 500. Now remember, guys, like I said, you want to either find areas of price where, something was broken, there was a continuation, there was a retest, and that's how I drew all these lines. So just to start with this one, like I said, we noticed price was going up for a while, and then, price came to a halt. So this would have been a major, resistance level. So what I like to do is draw boxes around here, because these are actually zones, guys. Sometimes price does not make a move at a specific level. It will wait and then retest that zone, right? It doesn't always necessarily come to 153,700, but it will come somewhere in this zone. And as long as I have this rectangular, box, I still know that price is doing what I thought it was going to do from the beginning. So I'm just going to draw these around every, key level that I found. And once again, this is just something to help you guys see things a little more clear and, keep you a little more organized, but still giving you the bigger picture without you having to, you might think that, oh, price didn't hit 148,500. It's not a valid opportunity to sell when it actually is. So remember, you want to look for the zone, not just the key level. but really finding the zone is just drawing a box in that area. So not too much to look for there. Do one right there. All right, and then I'll show you guys, where you would have wanted to buy and where you would have wanted to sell based off of, everything we've talked about so far. So like we said, we already know that at resistance, we want to sell. Now, the question is, do you want to get in right away when you see price tap that line? Well, no, because you don't know if it's resistance until it's been tested multiple times. So in this case, you could see, price was basically testing this line once, right, twice. And then the third time is when price actually gave us, that engulfing candle to the downside. And we had what we call a change in structure, right? Remember, if the market is going up or if it's bullish, it's going to make higher highs and higher lows. But if the market is going down and is bearish, it's going to make lower lows and lower highs. So we see price reverse off of this level, guys. It's always important to see if price is actually going to reverse and give you some type of formation. We also see, like a triple top or double top, pattern. So this is why it's important to know patterns, candlesticks, everything, guys. Make sure you have your charts printed out when it comes to, all those candlestick patterns and different things like that. But we could just see here the momentum and the price shift. So as a trader, you have to be smart enough to say, is price actually going to break through here? And at some point you have to make the decision. It's either going to be yes or no. So even if you weren't sure right away that this was resistance, what you would have wanted to do was wait. And you can see price kind of made like a level in between both of these. And that'll happen sometimes. You might find, different price levels inside of price levels. And if you use the quarters theory or different methods, you'll be able to find even more levels than what I'm showing you right now. But, basically all you would have had to know was there's a retest of this area. And if we get a retest, that's, showing us that price is in that direction, but it's not breaking. So we got a retest, which means it's a continuation because price didn't break any higher. So if we were looking for a sell entry, if we didn't catch it right up here at the major level, wait for that price to drop. And you could see it engulfed, this whole level of structure right here, all this consolidation. We had a breakout and then, price came up, but it failed to close. So entry could have been, right on that candle stop loss at that previous level of structure. And then, our take profit is just at the bottom of this key level. So I focus on risk to reward, guys. I'm not big on like percentages and stuff, but when it comes to trading, I'm not going to enter a setup if it's not like 1 to 3 or higher. Meaning if I'm risking, 10 pips, I want to make sure I can get 30. Or if I'm risking, 20, I want to make sure I can get 60, whatever the case may be. But that's not, what we're talking about in this video. But essentially it does come into play, when you're thinking about the overall concept. So like I said, what happened on one side eventually happened on the other. Now, the great thing about these key levels or support and resistance levels is that usually you can use previous levels as take profit. So once this one showed rejection and we saw some selling momentum, right? If we look to the left where this was acting as, a resistance over here, that's basically where our take profit would have been, right? Because that's a level of structure. Now, just to kind of scale in real quick and show you guys the detail of what happens. Like I said, candlestick patterns are very important and candlestick formation. So usually at these resistance levels, you're going to notice, a certain candlestick variation, as we call it. And you see a bullish to bearish variation representing that, buyers pushed up, but sellers came in. And we see right here, right before the major move, we had a nice bullish to bearish print that, led to this drop, a retrace, another bullish to bearish opportunity. So if you didn't catch that sell right there, here would have been another one. Now I'm going to move this over because there really was another opportunity on this retracement, to enter the market for a sell again. But what happens is a lot of people, take this buy. Now this buy isn't wrong. It's not, invalid. You would have made money if you bought here because the market went up. But, if you're a new trader, try to not counter trend trade. Once you see, a change in structure like this where price is closing lower than the previous high, only look for sells until price is broken or retested. And closes above here because, a lot of people would have been entering here. And as you see, price was just retesting. It wasn't reversing off this level long term. It was just, it did reverse in the sense that this was a minor support level. But then, the same resistance level was respected and price continued to drop, which would have given us another sell opportunity. So the key takeaway here is to understand that price doesn't always have to come back up to that major level. But if it's still making structure, right, and representing that, price is not going to close higher than here, here, or here, or here, then you're in the right direction, right? So same thing with the take profit. Once again, now we have a 1 to 8 risk to reward setup, guys. Like if you can get those type of risk to reward setups, you can lose, 3 out of 5 trades and still win because your 2 trades that you win are going to make all your money back, right? So we can see once price gets to a key level like it did right here at 150,600, it kind of got, consolidated, kind of got a little choppy. So as a trader, it's important for you to wait, even if the retracement is minor, wait for price to go back up. And then once you notice that close once again, that's when you can go ahead and you can enter somewhere either at that break, or what you could have waited for once again was that retest, that drop, another retest, and then just make sure, price is closing under the previous low or previous high because we're looking to sell. And then that's when you could have taken your entry once again, stop loss at the previous high. But you could really put the stop loss above the previous wicks on the setup you're looking for, especially once you get your entry and you see price going down, and then your take profit, you're just looking at this previous level. And where does this previous level go right to? Previous support level. So now we could have had our take profit there. But you have to understand momentum in the pair you're trading. GJ and yen pairs are very fast moving pairs. They have continuations. So I probably would have just extended this to this target down here and held it. Now, after a while, you can see price, start to go back up. And what happened was that price went back up, but it didn't reverse, So this is why it's important to understand the counter trend, because once you get advanced, yes, you could have caught the buy here and caught some buys in here. But if you're not that advanced, you just want to wait for price to drop, right? You want to wait for it to go down like this, and then wait for it to, actually form that next resistance level, which it did all the way over here, right? So you never know when price is going to, make its move and how it's going to move. That's why we like to follow price. You can't guess when it comes to Forex trading. You have to really follow price and follow what the banks are doing. So I'm going to take that off real quick. Right, so we see, price retested all the way back up here, but it respected this 150,600 level. So once again, now we're using the same level, but in different ways. In this example over here, we had price actually breaking through, representing that, sellers were strong. In this case, we had buyers, pushing up to this level, but not closing above this level, representing that sellers were still in control. So once again, even if you didn't notice it right here, wait for, the market to drop a little bit. And then on this last retest, when price makes this, lower high right here, that's when we had our bullish to bearish print. And that's when we would have looked for another, selling opportunity, stop loss at the high. And then once again, take profit is usually at the previous level. And we kind of knew that, buyers were in control this whole time and that sellers were going to push them out. So we see sellers actually pushed lower than this major low all the way over here, which was, indication that the sell was just really, really strong. So you could have actually taken that whole entire trade, got like a 1 to 6 risk to reward. But let's say you stopped at that level, you still would have got almost 1 to 5. Now, you have to be able to understand that these levels also represent major reversals and minor reversals. So understand, Forex markets never go up forever. They don't go down forever, like we said. But at some point, you will see a change in structure when, okay, if we've been selling for weeks and weeks and weeks, there's probably going to be a buying opportunity. But we're usually going to get some type of indication. Like in this case, we had some wicks down here. And basically, we had a level of structure that was eventually made right here. And you'll start to see these things if you continue to trade and backtest. But once we got this level of structure, this proved that our downtrend was no longer valid. See, because over here, we kept making, lower lows. And even though we did have some higher levels of structure, it wasn't after a major impulsive move like this. So if I get a major impulsive move like this, and then I see, this wick rejection, we have like this inverted hammer with a long wick to the upside, I'm going to think to myself, okay, price could be about to reverse. But if I wasn't in down here, if you didn't catch it at this 143,500 level, wait for price to go up. Once it goes up, wait for it to retest and close. It's always important to wait for the close, guys. The close will tell you that price wants to do what you think it's going to do. So now if we were looking for, bullish to bearish candles when we're selling, now we're going to look for bearish to bullish candles. And that's what happened right here, which would have given us a nice buying opportunity and showing this level of respect at this key level right here. Like I said, price doesn't always have to come back to the key level. Price might just come, near the zone, or it can just respect the zone with structure and then go to the previous target like it did in this case. So now we can see once again, nice risk to reward. Our entry probably would have been somewhere here once we noticed that bearish to bullish print. But the key thing to take away, guys, is the retest and, how price is closing at or above these levels. Now, once price breaks through another key level, then that's just more indication to hold. Let's say you were unsure because, you know, price was kind of choppy starting off, but once you get this engulfing candle breaking structure and then another engulfing, you basically can set your take profit right at the previous key level. And like I said, know when your pair is continuing and when you see a continuation. So in this case, you really could have extended it all the way up here, but we'll just go for here for sake of example. Now, what you would wanted to do at this key level, right? Take profit, don't be greedy. But let's say you didn't even get that high. Maybe you saw price retracing. That's okay, because now as a trader, you're thinking to yourself, if price retraces, but it doesn't break below this key level, now I know that I can continue to buy. So you could have taken 2 buys out of this setup right here, you know, for great risk to reward. And if you had to mark this off right here, you see that bearish to bullish, representing that, you know, we had a support level, but also that support closed higher than our previous support. So now, once again, we can kind of see what happened on this side, beginning to happen on this side. And then, you know, price did eventually stop and kind of consolidate right there. But basically, we were able to use all of our previous levels as targets or to help us get entry. So even though price didn't come all the way up to here, you know, we still would have got a good 1 to 5 risk to reward. And then what happened on this last, you know, kind of push right here is that price kind of stalled. And this is where you have to be smart as a trader. If you see price stalling and starting to go sideways, get out. Don't hold it thinking that it's going to keep breaking above when price doesn't have to do that. Price will just, you know, stall, and then eventually it could go back down or continue to consolidate. So this would have given you opportunity, you know, of 1, 2, 3, 4, 5, 6, almost 7, you know, 7 to 8 trades depending on your trading style. Like I said, I'm on the 4-hour chart, so this is long term, or, you know, more so intraday trading versus scalping. But guys, the key takeaway, you know, once again, is that you want to look for these, you know, breaks of support levels, right? That's how you know these key levels are holding up. Wait for those retests and then take your entry. And then, you know, it's the same thing when you're looking for a reversal, right? Price will eventually correct what happens on one side. So we saw price come to a stop right here, and then we had a little bit of correction and then a continuation through that level. So guys, this is how I draw support and resistance. Like I said, make sure you like, subscribe, because I'm going to be dropping more videos like this. But if you got some value, you know, definitely go ahead and throw that like on this video, and I will see you guys on the next one.